You know, you are the CEO of Cambridge House, so you've worked with a lot of different industry participants throughout your career. And in particular, you just wrapped up the VRIC. So why don't you give us a summary of what was different this year? What was the attendance like? What were the themes discussed and some of the headliners you had on the show?
Yeah. I mean, the major difference was that this one was virtual for the first time ever. You know, obviously when this hit in March, at Cambridge House, we didn't have to wonder if it was going to impact our business being a live event production company. It was, you know, right in our face. So we knew within 48 hours that we were going to be impacted massively, you know, and which was kind of fortuitous, to be honest, David, because a lot of my friends, fellow entrepreneurs in other industries, you know, they didn't get hit by, you know, the consequences of the global pandemic until 3-6 months in some cases down the road. And so, you know, it was a bit of a lag, but for us, it was very clear on day one, we were going to have to adjust and pivot. And that was actually really fortunate because we started shifting our energy right away, you know, end of March. We were already looking into new opportunities. And the way that business has changed is, you've been to many of our events across North America. You know, we promote the industry, whether we're looking at health science, cannabis, junior mining, whatever. But we do our best to invite the entire industry to participate. Investors show up, they can talk to a spectrum of companies on the trade show floor, which becomes sort of a marketplace for small cap investment opportunities, meet the CEOs and do their diligence firsthand. But we don't endorse individual companies, right? We just endorse the sector and provide opportunities to learn, to hear from experts like Rick Rule or whoever who's on the podium, investors that we respect and have great track records, and then hit the trade show floor and do your diligence. You know, since our pivot, what we do is essentially we treat our YouTube channel like our conference venue. We produce content with far more consistency. So, you know, a couple interviews per week typically. And then in addition to the weekly rhythm of content, which is conversations with either company CEOs or industry personalities that I want to learn from, we host summits as well. And we did our first summit in November. It was the Gold Summit. It's maybe 15 conversations through the course of a day, and our investor audience could tune in, watch the stream. I sat down one-on-one with company CEOs and then macro finance personalities. And so the VRIC, which is, as you know, our flagship event every January in Vancouver, Canada, we just brought that to the channel, and it ended up being a 3-day stream of one-on-one conversations with, macro economists, finance experts, investors with amazing track records, junior mining personalities, and company CEOs.
Yeah, so I'd like to get a sense or a pulse of what they've been telling you over the course of the last week or so. Starting with the resource sector. So, you know, I remember last year, Kai Hoffman was making a speech and he was talking about the dangers of, you know, the ETFs and the threats that poses to capital raising in the junior space. So capital raising was definitely an issue, a challenge last year that the industry faced. Do you see that continuing to be a challenge this year, or have people started talking about different challenges?
Yeah, I don't see that to be a challenge at all right now. I think that, I wouldn't say money's coming easy, but it's coming a lot easier than it has for a long time. And there's two reasons for that. I mean, what can investors look at right now that isn't overvalued, right? No matter where you're looking in the market, in various asset classes, you know, commodities are one of the only things that are relatively cheap, and a great, you know, proxy if you don't want to buy copper contracts or you know, physical gold are the miners and the explorers and the developers, et cetera. So the attention is there. And I think that the conversations we had at the VRIC were focused on two things, mainly, David. Number one, what are the commodities that we favor in 2021? And I ask everybody, whether I'm talking to a small cap junior mining analyst or up to, you know, our one of our headline keynote interviews at this event was former Prime Minister Stephen Harper. And, you know, it's kind of my job as the interview host to have as many of these conversations as I can, and then find where I see consensus, right? Where do the majority of the experts I respect agree? And then where's the room for debate? And without question, even though silver was the top performing commodity in 2020, I can tell you right now that across the 50 interviews we hosted last week, silver is still the top pick for 2021. Copper is the second. And there's a variety of reasons for that, but the main one is the renewable energy investment that's going to come on the back of the Biden presidency, the Democrats owning the Senate and being able to push forward to begin $400 billion towards converting the U.S. to renewable energy. And as E.B. Tucker said, that's just the appetizer of what's to come down the road. Yeah, so that was the primary theme. The second theme that we covered was sort of guiding investors. As you know, like when a junior mining market begins to heat up, the money does become easier. And one of the consequences of that is that companies that may not deserve your dollars end up with them, and the maybe management teams that haven't performed in the past, they're able to finance and promote deals. And what this means for investors is that as the market heats up, there's more landmines to step on. And so, in a good market, there's actually more risk if you're not careful, because promotions, your newsfeed, your deal flow gets polluted with all kinds of stuff that might not be in your best interest. So you have to be extra vigilant. And that was a lot of the conversations that we had.
Okay. Now, what about gold? You mentioned base metals and silver. What's the sentiment on gold? Is that still positive, or is that more neutral this year, given everything else you've just discussed?
So at this show, it was still overwhelmingly positive. And you just look at the macro storm, whether you're looking at currency debasement, possible inflation, global instability, a frothy US market that's probably going to correct again, whether as dramatically as it did last spring, but that music's going to stop eventually. And when it does, there'll be a liquidity crisis, and then people will, there's a trend, I know you see it, people moving from financial assets to hard assets, and gold's been a major benefactor of that. And once again, across the roster of gurus that we had on the show over the last 2 weeks, they expect that to continue being the case, absolutely.
I don't know if you had a chance to speak with your attendees at all. You mentioned you had 24,000 attendees, but I wonder if there's any disconnect at all between the retail investors attending the conference and the experts you've had on. Were there any disagreements between the two groups on anything, any assets, any outlooks on the economy?
The debate, so there's a live chat, and I'm super active in it during our events. It's really fun, actually, because we get our gurus, our speakers to participate as well, so the investors can interact like they would at a show. Sure. Company CEOs hop in the chat and everybody can communicate. And, as a consistent theme over the course of 3 days was the Bitcoin and gold debate, right? Okay. It just didn't stop the whole time. It was, and it's, people get quite evangelical on either side of that conversation. And so it's quite a spirited debate, and that would be the core area of disagreement, I would say, that I see in the marketplace right now.
What are the stances? What's the disagreement about?
That, the high level argument for gold is we're looking at 5,000 years of history, right? And nobody can predict the future. Absolutely not. And as a result, we don't price predict on our show. We don't try to time markets. It's a mug's game. But, you can look at the past, and 5,000 years is a very long history. You can apply that to the future and say, well, it's not a guarantee, but there's a high likelihood this trend will continue for a very long time. The counter to that is that, for 5,000 years, the majority of which we didn't have electricity and telecommunications and et cetera, and things eventually do change. And there's an argument for both. I think that the extreme on either end is wrong, and usually the truth lies somewhere in the middle. And I tend to try to temper the enthusiasm, and I hold both. I don't buy Bitcoin because I'm not buying gold anymore, and I haven't stopped buying Bitcoin when I buy gold. I think today, they're actually both important asset classes to have in your portfolio, depending on your perspective for different reasons, maybe for the same. But yeah. Okay. And there's less of a divide than used to be. 2 years ago, it was like gold or Bitcoin, one or the other. And investors couldn't.
I'm curious, at the VRIC, who likes Bitcoin more, the retail investors that attended or the experts?
Definitely the retail.
Interesting. Yep. And I've spoken to some people about this issue, and one of the interesting facts about Bitcoin is that, unlike other mainstream assets, it's really the retail investors leading the charge this time, and the institutions following. And so I don't know if you think that it's only a matter of time before you have some of these experts maybe agreeing with the guests. I've just had Peter Schiff on the show, who was a speaker at Rick, and he's always been very vocal about Bitcoin being overvalued. I wonder if it's only a matter of time before, larger, more established investors would also jump on the bandwagon. What do you think?
Yeah, I think we're seeing that. I think so. One of our keynotes at this event was Raoul Pal, and he's admittedly irrationally long Bitcoin. 98% of his investable assets personally are now in crypto, which is, he doesn't recommend anybody follows that lead, but this is the founder of Global Macro Investor, the co-founder of Real Vision Television, Very experienced hedge fund manager. Like, the guy's been around the block and he's very, very intelligent and has a history of being right. And we're seeing that, right? Whenever somebody like Paul Tudor Jones puts even 0.25% of his net worth into something, it makes headlines. And that's happening as well. And then you got personalities like Michael Saylor pushing their corporate treasuries into Bitcoin, and et cetera, et cetera. So, what I think about is recall the rally we had in 2017 to 2018 in the Bitcoin price and various cryptocurrencies. And we were running technology conferences in Toronto and Vancouver, and we couldn't find enough cryptocurrency or blockchain related deal flow for our audience. It was like, it was as frothy as it could have gotten, right? But it was 100% retail driven. And as soon as that price began to correct, bandwagon fans do what bandwagon fans do, and they fled the market and it crashed horrifically. And this time, maybe it's different because there's some more sophisticated conservative money in there. Simultaneously though, when Paul Tudor Jones purchases some Bitcoin, it's going to make headlines. Yeah. When he sells, it's not going to. And so.
You had a chance to speak with former Prime Minister Stephen Harper, and one of the things that surprised me of the things he said was that he thinks that Bitcoin has potential to be a reserve currency. Now, you maybe you can elaborate on this a little further, because you had the conversation with him. What exactly did he tell you?
Yeah, so he didn't necessarily say that specifically, but he essentially alluded to anything's possible. And this came on the back of his very real fear about the sovereign debt crisis that he believes we're headed towards. And, he became very somber at this point in our conversation. We started talking about are we heading towards the logical conclusion of our financial system as we've known it for the previous 50, 80 years, depending on how you look at it. And he agrees with that. He agrees that we don't know how to get out of the mess we're in. He agrees that no governments know what's going to happen next. And so all bets are off. And therefore, it's worth considering any potential possibilities. What surprised me most about that conversation with the former prime minister was how dramatic he sees this event occurring in front of us. This could be the generational shift in our financial system that nobody alive has really experienced before. We're looking at sort of 80 years ago. And so, I think that's where he pointed to Bitcoin as a possibility, but is he betting on it? No, he's not, but he did.
He did say, I think I remember, he did say that it wouldn't supplant the US dollar. Still, the US dollar is still likely going to remain the de facto reserve currency of the world, right? And and I wonder if when he was talking about the financial system, was he referring to Canada or the US or just the world in general?
Yeah, developed sovereign nations in general.
Okay. And did he tell you whether or not he had similar sentiments when he was in office?
We touched on that, and he didn't, because he's the guy the prime minister who managed Canada through the 2008 financial crisis, which wasn't really a financial crisis in Canada. Our banks were well capitalized. We had the lowest debt to GDP of any G7 nation at that time. Alberta had a positive balance sheet. We were actually set up very well. And so managing that was very different than managing this. In addition, I guess where he sees our fault right now is that coming out of 2008, we fell right into a commodities bull market, and Canada was positioned very well to capitalize on that. So as hurt as we got, even if we had been hurt more in 2008, we had this massive benefiting event coming out of this, which was, a 3-4 year commodities market that the world wanted what Canada had. His concern is that we're going to have that life raft coming out of this crisis, but we're not set up to capitalize on it as well this time.
Right. Okay. And what is your personal view on the economy and risk assets? Can we see a recovery this year, or can we see in terms of the economy, and then separately from that, the equities markets? Can we see either a continuation of the bounce back we saw last year, or can we see a crash?
Yeah, I think they're completely decoupled from one another, being the market and the economy, right? And I can't really see an event that would slow down the US market, because they're going to keep on propping it up and stimulating it as long as they have to. And no one really knows how far you can kick that can down the road, but it is 100% decoupled from the economy. And I'm talking about small to medium businesses, right? You can't print those cash flows. And it's very probable that we're looking at, a coast to coast widespread insolvency crisis because of that, right? And if you're in the restaurant business, the service business, hotels are operating at like 40 to 60% occupancy. They're built to operate at 80, so that's not sustainable. These things will come to light and they'll have to face the music soon here. And the market doesn't reflect that at all. Having said that, is there some kind of a vaccine recovery? Like, I can just speak about myself. I have a lot of pent up demand to get back to life. Like, I have enjoyed quarantine. I'm built for this. I like being at home, but my calendar is full of recreational and business travel commitments. As soon as I can make them, I'm now very much looking forward to getting back. And I imagine I'm not alone in that. So
I had this discussion with somebody else earlier today about what people are doing with the extra cash that they've presumably saved up over the course of the pandemic. And just going back to your example, why would you not save your money? Because why would you not continue your lifestyle that you've already had? Why would you change what you've already been living through over the last 8 months to a year? Do you see your life changing at all?
Well, certain things, yes. I don't have a corporate office anymore, and I won't add that back. We don't need it anymore. We're very functional as a team, remote. And that's nice because that was the goal for us 2 years ago, and we were just kind of figuring out how to do it. COVID provided the sense of urgency to figure it out fast, and now we have, and I can't see us going back. There's instances where I will look for office space for some of our employees. If you live with your partner and you have a dog and you're in a 1-bedroom apartment, it's not conducive to working from home, but there's opportunities that solve that don't include a 5-year office lease. Having said that, on a personal level, I like to travel and I like to go to events. Like I do, David. I attend a lot of conferences internationally, both just as a student. I like to learn. I like to be in the room and hear from people face to face. The relationships are important too, but it's a combination of the experience, the learning, and the connections you get along the way. And for me, I'm looking forward to getting back to that.
Okay. Well, finally, let's talk about Cambridge House now. What are your plans for Cambridge House as you carry through the recovery, the end of the pandemic, hopefully? What's next?
Well, I love what we're doing now. And even when we get green lighted to run physical events again, we won't stop what we've pivoted into, which is the weekly and weekly content and then monthly summits on the channel, just because it's so much fun. I mean, I'm an investor first, right? And that's the reason why we do everything else. And I'm trying to improve the performance of my portfolio. I'm trying to identify blind spots that, compromise my decision-making. And the content we create is the best opportunity for me to move the needle on those two things. Because if I get excited about an investment idea, the first thing I do is shortlist the CEOs. I'm a very people-driven investor. You got to play the hand you're dealt. I have conversations for a living, so I get the people, right? And I play that hand. I'm very people-driven, so I'll shortlist the CEOs that I feel most bullish on based on their track record, based on their supporting cast of executives and the directors, based on the shareholders they've attracted to the deal. And then once I've got my shortlist, I'll take my investment idea to the macro thought leaders that come on the show. And then I'll stress test it with them. And they can say, yeah, you're absolutely right to be bullish on renewable energy, but you're 10 years too early. And here's why. Or you're right on the money, or you're late, or whatever. But, so that's what the content does for me as an investor. That's what the content does for our audience. I think that's why we've onboarded, a large population of investors, because I'm a retail investor just like my audience. And I'm just trying to find the best path forward, maximize returns, reduce risk, et cetera. So we never give that up because it's become too valuable and we love it too much. Having said that, we will get back to physical events when we get the green light, and the first opportunity to do so will probably be a boutique event that we run in Las Vegas every June. It's part of our Pangea Club, which is our sort of high net worth investor base. And my thoughts are that's going to be our first opportunity.